Hi there, I'm Jeff Reeves, the editor of InvestorPlace.com. I'm talking with Jeff DeMaso, the co-editor of the independent advisor for Vanguard Investors. I'm talking with Jim Lowell, the editor of Fidelity Investor newsletter. Guys, there's been a lot of talk about the U.S. stocks have run up a lot. We had a great year in 2013, a decent year in 2014. Now people think that perhaps valuations are a little stretched, so people are looking overseas. Jeff, what do you see outside of America right now as kind of the biggest risk and the biggest opportunity for investors right now?
Great. Well, clearly the biggest risk, which one to choose? Europe's a bit of a mess there, talking about Greece. They're working on their bailout plan. Kind of sounds a little bit more like a political problem right now that we think will ultimately get solved. So we actually see some opportunity where risk looks like an opportunity to us. China has been slowing down, so there's a question about global growth. So there's definitely some risks out there. But we think when there's risk, that means that there's, again, as I said, opportunity. It means that prices haven't run up as much as they have in the U.S., with U.S. stocks really outperforming international stocks over the past 5, 6, 7 years now. We're definitely starting to see a little bit more opportunity overseas.
You agree with that, Jim?
Absolutely. We use Jed Weiss of Fidelity International Growth. He's got a good track record of turning over the rubble, finding the rubies, the hidden gems in there. We like Europe. It's clearly uncertain times there. That's perfect for a stock picker to get in and start going. We agree that and you look across the global marketplace, Japan looks relatively attractive, although it's anyone's guess whether their extreme stimulus measures will in fact work. We are worried about the emerging markets that are commodity dependent in terms of their exports. We think with oil prices being as volatile as they are and with China slowing down, that basically will rule out areas like Middle East, North Africa, Russia, Latin America for us, which means ultimately the Pacific Basin, where they are net importers of crude oil, where the discount in price actually improves their ability to profit on the goods and services they turn around and export, looks reasonably attractive.
So it's important to acknowledge that where there are risks and opportunities, you're not advocating investors go out there and buy individual Chinese stocks, right? Like you can diversify by getting a good Fidelity manager who's buying international stocks across these areas and kind of spread your risk around. That's
no question about it. I have very little interest in buying red chips. I'm a blue chip kind of guy, as you can tell from my bow tie. And Jed Weiss is really focused on the established foreign markets. He can own up to about 20% in the emerging markets. Currently, he's about halfway there. But it's really the play on the European multinationals. One of the things that I think investors need to understand, though, is that even though his fund is called International Growth, growth doesn't exist in Europe the same way it does, say, here, where we think of technology when we think of growth. We think of biotechnology. In Europe, a growth fund will have a lot of consumer-oriented, even industrial-oriented names. So it's a lower beta way to pursue the value of a potential growth in a company than you would find across the pond here, where we think of a growth stock as being pretty much all tech.
So Jeff, how's Vanguard's approach to the international markets right now? How are they kind of spread out geographically or across asset classes?
Yeah, our favorite play for looking overseas is going to be Vanguard International Growth. It has 3 different sub-advisors, but it's still a pretty tight portfolio of 150 to 200 stocks or so. And in the grand scheme of how many international stocks are, that's actually still pretty tight. And as Jim was saying with Fidelity International Growth, it's mostly focused on developed countries, so in Europe and Japan. But they do have some flexibility, call it 10, 15, 20%, where they can go into emerging markets as well.
So it's important to acknowledge, too, you're taking a long-term approach to these international funds here, right? You're not advising people to take all their money and throw it in because you think now is the bottom, right? This is part of a holistic approach to your portfolio. And do you always advise that even in any market, people should have some international exposure in their portfolio?
Yeah, we do. We're strong believers of being globally diversified. So as I was saying before, U.S. stocks have done well over the past 5, 6, 7 years relative to international stocks. So there's this trend right now to say, hey, why do I even need international? And you've been hearing people like Jack Bogle, founder of Vanguard, saying you don't need international stocks. We think that's a little misguided. Had you gone back, the prior 5, 7 years, so from early 2000s to 2007, international stocks far outperformed. So we see that markets move in cycles. And it's really hard to time those cycles. We think that's kind of a bit of a fool's errand. So we think it makes sense to always have some international. And after a period like the past 7 years, just don't give up on that international exposure. It will turn at some point. You're going to be glad you have that in your portfolio.
You agree with that, Jim? Responsibly invest in international stocks all the time?
Absolutely. You take a manager like Joel Tillinghast, a low-price stock that always has a third of that fund in foreign stocks. He's always able to turn over the stones and find some good opportunities. In terms of the International Growth Fund, Again, a concentrated fund, about 100 names, 30% of the assets in the top 10 picks. He is finding very attractive valuations compared to the U.S. valuations at current levels. And so far out of the gate this year in 2015, it's the international funds that are outperforming our own domestic funds.
So Jeff, there's dedicated international funds, but something you can look for in any Vanguard fund really is the ability to own some international stocks, even if that's not the specific flavor, correct?
Yeah, most domestic funds do have a little bit in international, maybe 5-10%. So it's worth popping the hood on your funds and taking a look. As we do in the newsletter, we'll let you know what that international exposure looks like. So you're going to have some even if you don't have a dedicated manager. But we do think it makes sense to often have a dedicated manager that's looking overseas all the time and really turning over all the stones that are out there.
Is that your same approach, Jim?
Absolutely, no question about it. We run percent foreign for all of our model portfolios. You're going to have a fund like Fidelity Mega Cap, which may not look like it owns any foreign stocks, but the preponderance of revenue in the stocks that it owns is derived from the global marketplace. So investors have global exposure. Right now, like Jeff, we like Europe enough, we like Japan enough so that we have a specific international manager buoying our overall foreign stock exposure in 2015.
Well, good stuff, guys. Great talking about opportunities outside the U.S., and we'll talk about more opportunities on InvestorPlace.com.